Hello and welcome to Business Television India. I am Piyush Jain and you're watching Market Guru. Joining us on the show today is VK Sharma of HDFC Securities. Ms. Sharma, welcome to the show. Now, let me recall here, the last time we were talking again, it was a bullish outlook on the markets which you were discussing with us. What's the outlook now again? It's August month, 4 months to again before the calendar year ends. Still about 7 to 8 months before actually we go towards the peak of the election euphoria or election worries, as again we want to say it. Where we can go? What's the sort of ceiling you're looking at the markets at present?
Okay. Piyush, I'd like to just correct put the things in a perspective. I think the last time we talked about the markets were in a unbelievable attitude that markets are going up based on 5-6 stocks, and they were not really accepting it. And the view was a question mark. People were not really
because of limited
confident.
participation.
They were not confident. And we had said, rather I had said at that point of time that by the time on August 15 when the PM unfurls the tricolor at the red flag, the market would have made a new high. And markets in fact did in the month of July itself. Where do we go from here? We are going to, just to look at in terms of technical terms, 11,999. So 12,000 mark is the level at which I think if that is a big hurdle, because 61.8% retracement of the various things that have happened in the past is that technical level. If that is crossed, I think that will become the base and you are going to new highs.
Right.
So obviously we are going to grow at a 12 to 13% CAGR basis going forward, and I think we'll look at something like 50,000 in terms of the Sensex by 2020 March.
Right, which also means you're saying like almost more than 1 year down the line again.
Yeah.
Right. So again, if I'm talking about on a Nifty basis again, because we're just talking about Nifty 12,000 levels, would that be a fair question to ask you? Is that level going to come around Diwali this time? If I just want to, and I know it's tough to again basically put a timeline here, but still I'm trying to ask you, is it like more you're thinking about a 4 to 6 month time horizon, or you think the current momentum is very strong enough for us to reach that level in the next 1 or 2 or 3 months?
I think one can definitely reach before Diwali. That's not an impossibility. Diwali this time is around 9th of November, so at that point of time the September results would have been almost 1 week more and that will be over. So I think that if it is to reach, it may be much before Diwali if the level is reached. If that doesn't happen, then it will be sometimes in December.
So almost 4 to 5% more rally could be seen in the next almost 2 months, because it would be having about 2 months here. So that's market here. One question also around the sort of transition we are actually seeing. 2 months back, we actually were looking about in terms of selected participation, Reliance, Bajaj Twins, HDFC Twins, and some few more stocks here. Now there's an interesting sort of what actually development we're looking at, that money is slowly now actually moving towards in search of mid-cap stocks also. There's a wider participation. There is again a sort of recovery which we are seeing in the auto stocks after 8 months of wait. We are actually now seeing auto stocks coming back. Two-wheelers perhaps because of what we saw in the results could be slight exception, but broadly there is a participation which is now broadening. Pharma stocks are coming back.
Yes.
Continued rally in IT stocks. FMCG continued rally there. In terms of market breadth, perhaps in your perspective, what is the sector leadership we should be searching now?
I think if you look at the leaders for the next 1 year or so, Reliance will be at the forefront, because that is where the re-rating is happening. People may not want to look at only earnings, but the way that the other businesses, what kind of attraction does the home to fiber of Reliance actually work out? Because based on the home to fiber, the number of connections they get, they're also then going to sell more number of television sets and other things. So here is
even more number of wireless.
Yeah. So essentially the growth in Jio will essentially translate into growth for retail sales of Reliance also. So, and these are the two factors which have not been, miracles say, adequately discounted at this point of time. So the PE that will change will take the stock, continue to take the stock higher. Other stocks that will contribute, as we see, is because you cannot keep on buying Hindustan Lever or Britannia for that matter.
Right.
So you'll have to look at some point of time into stocks like ITC, which are again a heavy weight in the index. So they'll also move up. in terms of autos, I think Suzuki Maruti is just completing a kind of a corrective phase, and it is about to venture out into newer territories. So we'll look at Maruti also. These coupled with the other sector like cement will come back after the monsoons. They will take the indices at a much higher levels. And obviously you talked about the mid caps. So that will be a function of what kind of money that comes in the small caps mutual funds which these companies are floating around. So definitely there is a value proposition in case of mid cap stocks, and that will be driven by the mutual fund route.
Yeah, the reason why I asked you because multiple theories again actually we keep on hearing as the market sentiment again progresses. One of the theory is that yes, 7 to 8 months down the line elections are there. So why will actually the major investors would like to take the political risk here? Why they want to go into small caps and mid caps where the exit becomes tougher? So they will like to stay in the large caps here. So my question to you is that if the correction has happened and if perhaps the money will slowly now shift to mid caps here, is it a good time for the investors to venture out for now a recovery play into mid caps, or still the margin safety is not actually adequate enough?
I think there is margin of safety right now more in terms of mid caps and small caps, essentially because they have fallen more. Yes, they have fallen more, and also the rules that were, whether it was the SEBI rule of reclassification of mutual fund holding or the margin obviously dictated by the exchanges, that has now played its way out, although the margins still continue, but they are no longer that kind of a overhang what it was earlier. So those things have played out, whereas these are available at a relatively cheaper valuations than what the large caps are. So there will be definitely a opinion here where these stocks will do well. So I think investors will do very well to play these route through the mutual funds. Right. So they'll be better placed there.
Right. So again, basically mutual funds in terms of small caps and mid caps again would be serving a better role here. Every time again we interact, there are some stocks again which you bring for us in terms of what perhaps could be the sort of outperformance opportunity here. Like what would be that first stock today which you want to discuss with us?
See, one stock that we'll like to discuss is Axis Bank. That is a bank which has done pretty well in terms of the fact that last 3 years it has now closed at a level which is almost maybe 10 rupees, 15 rupees lower than the all-time high.
Absolutely.
And so it is about to break out. So this is a stock that we would like to participate in. Essentially because the markets tend to know something more than what the fundamentals are. We look at the fundamentals which are backward looking, and this particular bank is not very good at giving future guidance, and going by the track record, there is very less, let's say, confidence in the whatever the management was,
and
in order to look at
multiples are at more than 30-40% discount to the top bank.
So therefore, if there is here is a leadership is going to change, so there is we should give a room of doubt to the new leadership, whosoever may come. They have a very good background on which they can build, because here it is easy because the PE, the concept is very low, so therefore it is a good candidate for upward rating.
I want to ask you this is very interesting because in PSU banks, a reverse sort of analogy actually we practice normally, that if there is a leadership change which is going to happen, usually the first quarter actually could be the worst quarter again, and there is a lot of basically NPA booking, a lot of again basically results actually they show that sort of impact, the stock price underperforms. And here's the case of Axis Bank. Before the leadership change, before the announcement of a new leader, the stock is actually moving towards the life high level here. What it tells you actually, does that tell that the market basically is now looking at perhaps the worst is over for the stock, the worst is over for the bank, and again going forward the multiple re-rating could happen, or is it too sooner to read at present?
So if you really look at Axis, you look at YOY basis, the situation has deteriorated, but situation has improved on a QOQ basis. So it doesn't give you that kind of a confidence. So it is very difficult to say that the worst is over for the bank. But I think the technicals are playing a good part here in terms of they are giving a lot of confidence that the new leader, whosoever comes in, will be able to turn around this a good bank. and at Securities with 7 lakh crores of balance sheet is a pretty good bank. So maybe one will look at one should buy out this stock. We also have a fundamental report, but I think one will have to buy it out in tranches.
Right. And in terms of private banks, is that entire space looking interesting from the perspective? Now, I'm just establishing an analogy here.
Yeah.
Now, this analogy could be right or wrong, but again, it looks interesting. We talked about the FMCG, HUL, again, substantial sort of run-up, and the market wanted to play FMCG, they went to ITC. The volume growth is still very, very different again.
Yeah.
But still, again, they are looking for ITC here. Similarly, again, HDFC ran up consistently, Kotak Bank ran up consistently, good run up in IndusInd Bank, and then market went for the value discovery, ICICI Bank, Axis Bank. So in your own perception, perhaps which are those private banks again, which we have talked about Axis Bank, but which are the other private banks again you think are well placed?
Another private bank which looks good is RBL Bank, although it is an old recommendation, but we continue to see uptrend here. I think we have a target of 710 in this particular stock, but these targets need to be reviewed each quarter after the results. We believe that if you look at the past, this bank has grown at a rate of NII has for the last 5 years has been around 46% and net profit around 35%. Going forward, we believe that they will continue to grow at a rate of 32% in terms of NII, and in terms of net profit, 30% growth can be seen in the next 2 years. In terms of NPAs, we did see some marginal improvement on a quarter-on-quarter basis, but there was no improvement on the gross NPAs. On the net basis, we did see improvement. But here is a bank which has been growing its net interest income continuously NII for the last 9 quarters, and this they are confident of maintaining and growing. So I think this augurs well, and considering the fact that the NPAs are going to be in control, they do not foresee a further decline in NPAs, but even if these are stable and they maintain their growth rate of 35% in the loan book, I think this is a stock which will go places.
Right. Do you think that sort of CASA increase story again, which is playing out for the bank in terms of good CASA increase from where they are right now, around 20% plus minus 5%, towards the 40-50% mark again, which the top tier banks have? Maybe it's going to take some 10 quarters. Yeah, a long time.
Yes.
But is that something which is positioning the bank, which is why investors are taking this bank with great interest? Like there are other banks also. Bandhan Bank, another sort of similar niche private bank. Segments could be different, as again we were talking earlier.
Yeah.
Apart from that, there are DCB and there are a host of other private banks here. Why actually this bank basically you think is slightly more attractive at present?
I think they've managed the risk pretty well, and I know certain actions which they had taken preventive actions, and therefore there's more confidence in this particular bank in terms of handling the stresses which usually come to banks at this point of time. Another reason we believe is that the net interest income of this company is just 4.1% or so. So this is very easy to defend, and with the cost coming down in terms of increasing of their CASA, I think this is doable. Whereas if you look at the same terms with a stock like Bandhan Bank, very difficult to see maintenance of these kind of NIMs.
Right. In fact, even if I'm looking at the deposit growth again, more than 25% deposit growth, loan growth again, more than 30% loan growth again, return metrics actually are looking quite good. From that perspective, how much comfortable you on the valuation per se? And what sort of target you would be looking in a sort of time frame you want to define? See,
for a next 3 quarters or 4 quarters, maybe you can look at a price of 710 or so, which is a good appreciation to look at, considering
roughly
from the market.
15% appreciation.
Yeah, that we can definitely see in the coming 1 year.
Right. And is this at present where the bank is trading right now? Are those valuations comfortable? And I'm asking this question intentionally. Primarily because there is on one aspect there's a value chase where you have those Axis Bank, ICICI banks. The confidence could be different question.
Yeah.
And another one where there are mid-cap private banks who are doing good. Results are showing good growth. And you're looking at a consistent sort of premium valuation compared to the other sort of banks here. These valuations are you comfortable on that?
I think they're fairly comfortable, but since the stock has run up in the last 1 week or so, slightly higher than that, so somebody entering now should definitely make some amount available to be bought at 5 or 7% lower
Any
also.
more opportunity?
Yeah, so that should be definitely be kept in mind. Whereas if you look at the FY20 price by book, it quotes at 3.18. And I think if you apply the same theory to Axis Bank, it is available to you at 2.4 FY20. So I think there is more safety in terms of Axis Bank, but we would like to go there looking at the phase that joins.
Right.
So maybe that will combine. So at that point of time, we'll like to revisit the order. But currently, I think going by this, both of them look good. Slightly in terms of potential, there is more potential in Axis. In RBL, more certainty because of the lower NPAs.
I think no surprise, consumption and banks, they both have shown track record has been given premium multiple consistently again.
Yes.
So I think that's one thought I think on the financials as we're discussing with Mr. Sharma. Apart from financials, what's the next talk you would like to discuss?
I think I would like to revisit some of the past recommendations that we have talked about, and one of them is Thomas Cook. I remember that we recommended this stock at around 270 odd on your channel. And I think currently it quotes at 248, having seen a low of 238. Obviously, your investors must be asking you what to do now. So my idea is to reiterate a buy even at this level. And even when you buy now, also look at the fact that there could be a potential that the stock could see a low of 220, although I don't see a good, let's say, surety for certain purposes that will do reach, but one should be ready for that kind of a level also. Now, currently if you look at a current price of 245, 248, what it is quoting at, and so you get, if you take the value of Quess, where you'll get one share for every 5.3 shares held in Thomas Cook. The valuation for Thomas Cook per se will work out to something like 44, 45 rupees.
Okay.
So
and that you're talking about the core tourism business.
Core tourism business, where you have Forex, right, where you have the tourism business, and also where you also have the holding in case of the holiday company, Sterling Holidays, which the company acquired. Also, you will get Quess also. And mind you, in Quess, one of the reasons why the valuation stock came down was the guidance which Quess gave that there will be one more quarter where they'll have to provide for there will be high provisions because of the various acquisitions that they've done over the last many years. So, and after that, the ramp up in the margins will improve for Quess. So essentially, because almost 3/4 of the value comes from Quess, so essentially you also need to look at Quess. So I think the next 1 quarter is the time where you can buy the stock at pricely lower levels, but the markets have a tendency to discount in advance, so not surety that they'll go down further. But with that in mind, I think one can look at that 1 more quarter is a weakness, but beyond that I don't see, and your investors would be laughing all the way to the bank in 2 years' time from now.
Right, I was setting our views, I think, Mr. Sharma, but let me also ask you one thing is, what's your own take right now at present? The return on capital employed is roughly around 4%. Again, usually you would like that to be more than 10%. In terms of debt equity ratio, no leverage at all. It's a tourism business, a good, rather I should say working capital is very much favorable for the company, again, the way it works in terms of industry here. From that perspective, in your own sort of sense, the return metrics, why actually they have been underperforming?
See, I'd like you to look at these two companies earlier, Thomas Cook was the holding company of Quess, and therefore now Quess will become a separate company.
Right.
So you are unleashing two leaders on their own turf where they're very strong. And you look at Quess, I mean, where have you seen 23 companies being bought over a span of a few years? And each company a good company on their own right, ready to be listed if they want as a separate entity altogether. So look at Quess as a manpower supplier company, look at it also as a technology company. Right. They bought over Monster, the Indian all the Asian operations ex of China and Japan, right, which means India, Southeast Asia, and the rest of the world, rest of Asia. So it's a very the kind of valuation they bought is very cheap, and it is not paying cash. It is paying by virtue of their currency. The stock, they can issue price of the stock issue price, and then they can buy.
That dilution is happening.
So the dilution is happening because of that. And you are buying stocks cheap and giving them the currency of your stock. So I think this is an excellent, let's say, management decision, which will see results in the next 2 years. So I would like your investors to sit tight on these two stocks and hold them, and any dips should be bought. And travel business is a negative capital business, working capital business.
Absolutely.
So this itself will be judged after it is listed as a separate company. So I think it is unleashing of two giants which will happen, which in fact will be make 2 + 2 is equal to 5 or more, not 4.
Right. Any thoughts on the resort business? Because we have seen what actually Mahindra Holidays has done again, continuous quarter after quarter, ramp up of new capacities, new rooms. Any thoughts around sort of value expansion coming from that part, or it's still too small, too early to actually focus there?
Still too small, but the fact is that now these people have taken over, so there is a more bandwidth of the management to look at these kind of businesses, where the number of rooms are being increased. But obviously it is going to be a capital intensive. But mind you, there are going to be revolutionary changes in the way that these companies will get managed. So I'd not like to speak on that particular subject to that extent, because the travel business, which is much bigger itself, is yet to be re-rated. So I'll rather put more attention on the 75% of the business, in which the Quest will be seen 2 years from now, looking at the kind of the business that it generates after buying them cheap. So I think this can be the topic of my own portfolio. I have both these two stocks I have individual capacity. I hold Quest, I also hold Thomas Cook, and should they dip, I'm ready to buy more.
Aiming for future, what sort of target actually looking for?
I think one can look at a 30% CAGR combined for these two companies, your portfolio, for the next 3, 4, 5 years.
Well, 30% I think is definitely, I think the viewers, I think they will be very pleased with that. I think that actually is a very good number in terms of anything about 20%, I think. So 30% definitely is a good number. So that's two stocks we have talked about. I also want to ask you again, the change we have seen in some of the sectors again. There's a renewed buy in chemicals, pharma again coming back here. Anything which you like, or a broader sense which you're looking in terms of any structural change in terms of the way again these sectors perhaps could be performing?
Yes, pharma is a sector that we talked about in one of these shows with you, and I'm proud that we in fact talked about it, because we called a bottom there. The bottom was formed in the month of May, and June onwards when we spoke, there is a time when we pointed out Sun Pharma. So while we like many other stocks, but we still believe that there is in Sun Pharma alone, there is a good visibility going forward, where we see as compared to March 18, March 20 will see a rise in earnings of around 70%.
Okay.
So part of that itself I think should augur well. And
the stock also go up similar proportion?
Yeah, maybe slightly more in more proportion, because what you look at is that earlier there was an element of under ownership, and now people are getting back, because the frenzy with which the stock rises, its frenzy is more seen at a later level,
right,
not the initial level. So it has more 2 years to go for this. So I think we like this sector, and among this is our topic.
Well, I like the last line again, 2 years again, which also means again you have to be patient in terms of the improvement with the pharma stocks are going to show in terms of results. Perhaps stocks choice, I think that could be a sort of a matter. Sun Pharma again, as Mr. Sharma is saying again, could be showing some improvement here. Thanks a lot, Mr. Sharma, for sharing us your insights into the index and the stocks here. And that brings us to the wrap of this edition of Market Guru. But stay tuned, as more updates are going to continue on this side.